I'm Sean Cooper, president and owner of Fit Financial Consulting LLC, a registered investment advisor. The next topic we're going to discuss is financial analysis, which really takes one of our prior topics, portfolio analysis, to a more granular level. And we're going to be focusing in on individual security analysis and the two primary methodologies for analyzing individual securities, fundamental and technical analysis. So fundamental analysis is really the more traditional methodology, and it looks at the financials, so the statements, income statement, statement of cash flows, and the balance sheet. So it's really numbers based. Technical analysis, or charting as it's often referred to, looks at the graphs of price. So it's going to be looking at things like momentum, support, whether or not a stock is overbought or oversold, or even a security is overbought or oversold. And we're going to be discussing each of these in a bit more detail. The first thing I would actually refer you to is Investopedia. It provides a relatively great video on fundamental analysis and what it is. But to give you a general idea, like I said, it really emphasizes the financial statements. More specifically, within the financial statements, that income statement, the balance sheet, and the statement of cash flow, the ratios that you can develop on those statements. So PE, price to earnings, PB, price to book, operating cash flow, which can also be turned into a ratio by evaluating it relative to short-term debt or something along those lines. And these ratios are used to both gauge the value of the individual security, but also whether or not that particular security is under or overvalued relative to other securities. So by converting everything to a ratio, you essentially allow yourself to compare that individual security relative to the market, or at least, the very least, relative to its peers within a particular category. And fundamental analysis can be further utilized to actually gauge the overall health of a particular economy. So actually look at the US economy on a global scale relative to the EU or China or the emerging markets. So it can really be diverse from the standpoint of analyzing that individual security or much broader scopes. Technical analysis, on the other hand, I would again refer you to Investopedia for another quick video on that, but it is looking at essentially historical data. And I know the income statements and the other financial statements are technically historical. They're a single point in time, but they're going to be looking at much longer streams of data, potentially looking at entire charts of price over anywhere from a few days to many years to gauge where an investment is likely to go in the future. And they're looking at the price. They'll probably look at things like volume, momentum, whether or not is it going up, but is the volume increasing as it's going up? So that would imply increasing momentum, whereas it's going up, but the volume is actually decreasing, so it's actually losing momentum. They're also going to be trying to distinguish patterns in the stock price over time and trends. Is it going up? Is it going down? Is it going sideways? They'll look for other patterns like flags or pendants, which is a little more nitty-gritty than we'll probably get into today. But some of the more common ones are reversal patterns. So a double top, so you see the stock price come up and hit the same point twice and then head back down, or a double bottom, which is the exact opposite, or a head and shoulders pattern, which would be the stock price reaches a new high, then a higher high, and then it comes back to the old high and heads back down. And then the exact opposite of that as well would be a reversal to an uptrend. So things along those lines, as well as support and ceilings. So where those double tops or double bottoms hit, or even if it hits multiple times along a certain price point. If it's hitting at the bottom, that would be support, and if it's hitting at the top, that would be a ceiling. So things like that is what they're looking for, and then especially breakouts from those supports or ceilings or patterns and things of that nature. And they're going to be utilizing it to determine which direction the stock is likely to go in the future, and then also how far that individual security is likely to progress in that direction. So to recap these two methodologies really simply, fundamentals, looking at the ratios, the financial statements, it's numbers oriented. Technical analysis looks at the graphs, the trends, the patterns. It's really based on the charts overall. However, these two methodologies can also be used in tandem. And the way that's done is fundamental analysis is used on the front end to determine what specifically to buy, what is undervalued relative to the rest of the market, what should you be purchasing, what's a good value. Technical analysis is then utilized to determine when you should purchase that particular security. Based on that chart, when does it break out, when is it a good time to buy, after you've already determined that it is in fact a good thing to buy. And again, when you should sell it as well. So next week we're going to be jumping in even deeper and really emphasizing what I look for in my own personal research when I'm evaluating mutual funds, ETFs, and individual stocks. If you have any questions or need anything from me in the meantime, by all means, give me a call, 720-808-6979, and I can be reached at email by sean.cooper@fitfinancialconsulting.com. Thanks.